What's up guys, it's Andrei here. Have you ever wondered how our pocket change can turn into something much more bigger? What if I told you that our money can actually work for us? Well, get ready to find out how we can actually make our money grow faster, and we will dive into the world of stocks, real estate, bonds, mutual funds, and other types of investments. Imagine a process where our money doesn't grow only from our initial contribution. Besides that, it will grow from the interest and the returns it accumulates over time. This phenomenon is called compounding. This will add an extra layer of growth to your investments. Time. Time is our greatest ally when it comes to investing. The longer our investments have to mature, the longer they will benefit from the effects of compounding. Here are 3 key things that we have to keep in mind while investing. Regular contributions. A regular contribution to your investment portfolio would not only increase your potential returns, but also will enhance the compounding effect. Each contribution becomes one of the building blocks that multiplies over the years, increasing your overall wealth. Be patient. Being patient with your investments will allow you to weather the market ups and downs. You will need to plan your moves carefully and always rebalance your portfolio to accommodate for the financial trends. The longer you remain invested, the longer you can capitalize on the exponential growth that will come from reinvesting your earnings, especially if you don't need those earnings here and now. Start early, start strong. Starting earlier in life to invest will offer you a distinct advantage. Even small amounts invested in your youth will have a remarkable chance to flourish due to the extended time horizon. Showcasing that time is truly the key to realizing the magic of compounding. Now let's get straight to the point. Let's talk about stocks. When you're investing in stocks, essentially you're becoming a partial owner of their company. This ownership can potentially entitle you to a portion of the company's profits, the dividends. Think about the dividends like bonuses that companies give out to their owners, the people that own their stock. Imagine when a company makes a profit. That profit can be shared with the people that invested in the company by buying its stock. Dividends are great for people that want to get some extra money from their investments while also waiting for the company to grow. To put it simply, it's a simple way for a company to say thank you to its owners for believing in it. Another way that stocks can be really captivating is their potential for significant growth over time. Let's take a simple example. You invest $50 in company A, you buy 1 share of company A worth, let's say, $50. Company A grows and prospers and gets more profitable, and over time the share of that company also grows in price, and direct proportionally will also increase the price of your share that you own from a couple of years ago. Let's say now it's worth $100. Basically, you doubled your investment by just keeping and believing in that stock. There's the true power of investing and believing in stocks, of course doing your own research also. The potential to turn a small, initial and modest investment into substantial returns over time. Talking about shares, these shares can be usually bought on the stock market by opening a brokerage account. If you guys are really interested in opening a brokerage account and starting your investment journey, feel free to use any of the links that are put in the description below. A really important tool that I use on a regular basis to check valuations and sometimes charts and other types of analysis is Seeking Alpha. You'll find company valuations, tons of articles, and other useful information that can help you out on choosing what company and what stocks are the best fit for you. Right now they offer a 7-day trial, and after that you will have a $50 coupon discount for the whole year subscription. So basically for the whole year subscription you'll be paying only $198. That means around $16 every month. So if you guys are interested in opening an account on Seeking Alpha, you will find the link in the description. Bonds. Think about bonds as loans. Basically you'll be lending money to a government or a corporation, and in return the government or the corporation will give you an interest over a specific period. Bonds offer an attractive balance between risk and reward. Unlike stocks, for example, which tend to be more volatile, bonds offer a more stable income stream. Mutual funds. A simple and smart way to put your money to work and diversify your investments while leaving the management to the pros. This diversification will minimize the risk by putting all your eggs in one basket. By deciding to invest in mutual funds, you will gain access to a broad spectrum of industries and sectors without the need to manage individual investments. Another avenue that embodies the essence of long-term growth and income generation, real estate. Just as the magic of compounding multiplies returns over time, real estate offers a tangible way that you can harness the power of consistent earnings and property appreciation. Whether you choose to invest in residential homes, commercial areas, vacant land, the world of real estate offers a diverse array of opportunities for those people to seek to put their money to work for them. Now let's take a closer look at the basics of real estate investing and how it fits in the landscape of wealth building. Real estate is a popular and diverse form of investment that involves purchasing, owning, managing and selling properties for the purpose of generating income and/or capital appreciation. Well, because we're talking about real estate, let's dive a little more deeper and get more details about this topic. Types of real estate investments. Residential real estate. This mainly includes single-family homes, apartments, condos, townhouses that are mainly used for residential purposes. Commercial real estate. This involves properties used for business purposes, for example like office buildings, retail spaces, hotels, and warehouses. Industrial real estate. Properties used for manufacturing, distribution, storage, and other industrial activities fall under this category. Mixed-use real estate. Properties that combine multiple types of real estate in a single development. For example, residential with industrial, residential with commercial, commercial with industrial, and so on. Vacant land means you'll be purchasing undeveloped plots of land that have a potential for future development and appreciation. Question: how do we use real estate to generate income? Rental income. One of the primary ways investors earn money is through renting out their properties to other people, aka the tenants. This income that we receive for renting out the property can be used in multiple ways: paying off the mortgage, saving it, investing in the stock market, and so on. Just as water slowly but surely flows from a tap, this rental income basically will be boosting the investors' funds. In the world of business buildings, investors can sign contracts with companies to rent out their spaces for a longer period of time. This means that the investor gets a regular stream of income paid by the company. It's a guaranteed income as long as the rental agreement lasts. So when companies need a place to work, they usually rent out from the investors. The investors become the landlords and they get paid regularly for letting the companies use their properties. Short-term rentals. Another way that we can use our real estate to generate income is by using them as short-term rentals. These rentals have become more and more popular over time for investors to generate income out of their properties due to platforms, for example like Airbnb. Instead of long-term leases, these rentals are for a shorter period, often a few days or weeks. If by any chance you have an extra room in your house or you have a vacant apartment that you want to make more money on, why not start setting up an Airbnb account? So by using the link below, not only you'll be supporting the channel, but also you will be creating an additional income stream that maybe you were thinking of but you didn't take any action on it. So start making the most of this opportunity and start earning today. Appreciation and capital gains. Real estate properties can increase in value over time, leading to capital gains for the investor if he decides to sell their property for a higher price than the original price. However, real estate markets can be cyclical, which means the increases in values are not usually a guarantee. So let's say you don't have enough cash so you can buy the whole property in full. You're gonna be going to the bank, you're gonna be getting a mortgage, and you're gonna be basically using leverage so you can buy the property. So here you are a few examples of mortgages that you can get from the bank right now so you can buy and own a property. You can get a FHA loan, a fixed rate loan, or adjustable rate loan, and so on. A really important fact that you should keep in mind before buying any property is to always do market research. Doing this will allow you to search and find the best areas that have huge growth potential and also that give you the best deal. Factors like neighborhood amenities, job opportunities, public transportation, development plans, all of these combined can ultimately affect the value and the price of the property. Now let's recap. Investing in this asset can provide attractive opportunities for those people that are willing to do the research, acquire and manage their properties efficiently. And so investors can choose to manage their own properties or they can hire a management company. Regarding property management, this will require a lot of expertise while dealing with tenancy issues, maintenance, repairs, or other legal matters. Even though real estate is really hard at the beginning till you get the hang of it, ultimately will be a great asset to own because this will diversify your portfolio and also will give you tax benefits. Diversification. Real estate can provide diversification to an investment portfolio as its performance is not directly correlated to assets like, for example, stocks and bonds. Those who choose to invest in real estate can benefit from the tax deduction, for example like property taxes and depreciation, which can offset the rental income that you get and other tax liabilities. So while you're creating your investment plan, always try to remember these three main steps. Number 1, assess your risk tolerance. Number 2, always try to create a diversified portfolio that matches your risk tolerance and also your aspirations. And lastly but not least, number 3, always try to review and update your portfolio so it matches your evolving goals and also the market conditions. Market timing is a tricky game. Try to resist the urge to predict the market's movements and always try to focus on the long-term perspective. Thank you guys for watching. If you have any questions or comments, feel free to leave them in the comment section below. And also, if you found the video useful, why not give it a like, or why not consider subscribing to the channel to see more videos like this on personal finance, and I'll be seeing you in the next one.